Hi everyone, my name's Razak from Tax Accounting. Just wanted to carry on from the videos I did previously. This is around a conversion from a commercial property to residential. If you haven't seen the part 1, which was the overview, part 2 was a video around when you acquire a commercial property, what you do regarding accounting and tax measures and cash flow measures. This is linked around totally around what you do when you've got the property. So number one thing is make sure you get good financial support to appraise your project and ensure your cash flow stacks up. This is one of the number one killers of projects where cash flow doesn't stack up and projects are not making money, and therefore the developer fails in their pursuit of making an enhanced asset. The other bit is really powerful is some of the cash flow and tax implications when you are doing these projects. So if you buy a commercial property to convert to residential to sell it, then there's no issues about claiming back your VAT provided you're VAT registered, and it would be at 5%, not 20%, because it's a conversion from commercial to residential. However, the problem comes when the developer, for whatever reason, changes their mindset and says, I want to hold on to this property. And if it's converted 100% residential, then there's a problem, because when you claim VAT back, the taxman, i.e. HMRC, want their money on the sale. And if you're not going to sell it and you're going to rent it out, residential let is exempt. And you might think, what's that about? Okay, it's exempt, so what? But that means HMRC will claw back the VAT that you claimed. So for example, in our project, what we said was a £500,000 property plus VAT when it's bought, and the project say was £300,000 to develop it. That would have been at 5%, £15,000 that you would have gained by claiming it back. You don't really want to pay that away. So the way to manage and tax plan against this, and it's a very good tip, is if you decide to keep it, always get good advice from an accountant, tax advisor or business advisor. And what you can do is set up a subsidiary of the company and set up a lease and sell it. The lease has to be at least 21 years. And what this does is, provided it's sold within 3 years, it's 0 rated. So you've done a sale, you've cleared off for HMRC requirements, but you've been able to keep the money. You also will protect yourself against corporation tax in this transaction, because this is a group relief that you'll be able to claim due to the parent company and the subsidiary. The other bit that is really useful is you're exempt for stamp duty as well. And this is hugely beneficial when you're structuring. So getting good advice and understanding what you're doing with your property is really important. The other area that people always get worried around is a legacy, i.e. inheritance tax. And that's quite a deep conversation depending on what someone wants to do, because the structure is quite important in this case, and what activity that you're doing. So for example, investment businesses that have residential don't tend to get something called business property relief, now called business relief, which obviously protects them if someone passes away. So there is an inheritance tax issue. One way of minimizing the inheritance tax is, and it's so important to look into this, and my favorite area, if you hear from business owners that speak to me, is pensions. And that's a whole conversation in itself, but I'm going to talk particularly, say, SSAS pension, because when you put money from your business into a pension, it goes outside inheritance tax. I know I've covered quite a lot there, but I'm just trying to give you examples why speaking to a good accountant, tax advisor, business advisor who understands property and not only the financial aspects around cash flow, how to manage performance, but also the tax exposure and pensions and leverage, can help you a lot in your business journey and save you a lot of money and make projects that weren't profitable. So thanks for listening. I hope this has been really useful. Please do click like, comment or share if you found this useful. And I wish you a lovely evening. Take care. Razak from Tax Accounting. Thank you very much.